Today we are lucky to have with us Mr. Alejandro Werner, who is the Chief Economist of the Western Hemisphere at the IMF. Welcome and thanks for coming to the IE Business School.
No, thanks for inviting me.
Just a few short questions. On one hand, we used to have the US economy growing at an annualized rate of circa 5%. The latest data we got was 2.1%. They have interest rate hikes coming on. The US dollar is quite strong. Do you see the US economy growing more in the region of 2 or 3 or go back to levels of 4 or 5?
No, for 2015, our forecast is that the US economy will grow at 3.6%. This after having grown around 2.5% in the year 2014. And in 2014, we had two pretty strong quarters, the second and the third growing at the rates that you mentioned. I mean, basically, that was, I think, a sign that the US economy is picking up steam, that the consumption is gaining ground, that the external sector is doing well, but also some payback from a very bad first quarter associated with a very bad winter in 2014. And we saw that a little bit in the last fourth quarter number that was around 2.5%. However, I mean, for 2015, we do see the US economy on trend to grow at 3.6%, as I said. I mean, the numbers for the first 2 months that we have had are slightly weaker than what we expected. That might put some downward bias in our forecast. But we see a US economy in which the labor market has healed significantly with unemployment rate around 5.5%, employment creation being very strong. We see, I mean, some signals that investment is also gaining ground. And I think the most important thing from the external side is basically the decline in the price of oil, that although oil production has increased a lot in the US is still a net importer of oil, and this will significantly benefit US households and therefore consumption and growth. And on the other hand, dollar appreciation. And I think we still think that the confluence of these factors are very good for the US economy, and we see a very strong year in 2015.
So the Fed should start to raise rates by the summer, which is will probably imply that people repatriate funds from some emerging countries. So by definition, countries which have current account deficit financed with portfolio inflows are at risk. In LATAM, which would you say are the highest risk countries in such an environment?
Yeah, you're right that it is true that the market is expecting the Fed to start the normalization of monetary policy with the first interest rate hike anytime between the summer and September or October. We have to also recognize that this is the monetary policy tightening that has been more telegraphed and communicated maybe in the history of monetary policy. You know? So everybody's expecting this. So on that sense, it shouldn't have such a large effect because it is an unexpected movement. On the other hand, I think there is a concern by many analysts that this period of very long period of extremely low interest rates have generated some mispricing in some markets, some excess investment in some emerging markets, etc., and that the initiation of the policy tightening cycle in the US might be the trigger to generate some kind of reassessment of portfolios, and therefore the effects that you were mentioning could get triggered. And I think there are two factors there. One is the fundamental weaknesses, as you were saying. I mean, countries with larger dependence on portfolio inflows to finance large current account deficits, and countries with high inflation and more volatile environments can suffer a little bit more. And there you have, I mean, depending on the fundamental that you want, I mean, large current account deficits in Peru, in Brazil, in Colombia, etc. Higher inflation in Brazil, low inflation in Peru and Colombia. And then you have those countries in which, although the fundamentals are not weak, but they have a high presence of international investors. For example, in the case of Mexico and Peru, international investors hold more than 40% or around 40% or more of local government debt. So if foreign investors want to reassess their portfolios, maybe even if there are no weaknesses, there might be some volatility in these countries. But overall, we do think that there might be important volatility in asset prices. However, we are seeing that the balance sheet of banks, the balance sheet of governments, and the balance sheet of corporates are relatively sound in the region to withstand a volatile environment. And we have seen that because, for example, we have seen the currencies in the region depreciate a lot in the last 12 months without triggering problems in the balance sheets of the main economic agents in the economy. So, and the last thing is almost all of these countries have a significant amount of international reserves that might allow the central banks to act in a way that they can minimize excess volatility in the markets.
And finally, many emerging market companies and also in Latin America have issued in the good years liabilities in hard currencies. Now the many Latin forex are down 20-30% against the US dollar, and this money has to be paid back in dollars, but they make the revenues in local currencies. To which extent this could trigger a credit crisis?
Yeah, that's a very good question. I mean, we have been studying that periodically at the IMF. And when you look at Latin America, a substantial part of this debt has been issued by companies that produce tradable goods, and in many cases commodities. So in that sense, the final price of the good that they produce is set in dollars. So in that sense, they don't have a currency mismatch. So their income is in dollars. Some of these companies might face some problems, not from the decline in the currency, but from the decline in the price of commodities. Corporates have increased their leverage. Also, as these economies are slowing down, net income for these companies is coming down. So leverage ratios can be relatively a little bit higher than what they were. So there might be some volatility coming from the corporate sector. We still think that the currency mismatches are relatively manageable, and that although some of these companies will see their leverage ratios weaken due to the weakening economy and the declining commodity prices, they have used this period of abundance financing in international capital markets to also increase maturities to significantly reduce the cost of their debt. So overall, we still think that this has been a plus for these countries in terms of strengthening the balance sheet, but this does not mean that we might not be faced with some surprises in the corporate world in firms that got into debt in foreign currency and eventually suffers some of these problems. But we still think it's the probability of this being systemic is relatively small.
Alejandro, many thanks for your time and welcome again to our school.
No, thanks for having me.